Hello everyone, welcome back to the Options Professor podcast. This is Damien and today is Friday, June 11th. I had a really good week. I'm recording this podcast a little bit early because I'm out of all my trades this week. I went 5 for 5, 5 winning trades out of all the 5 trades I did and no losing trades on the spreads. All right, so as a reminder, I'm only holding these for really 1 to 2 weeks. I don't like to go too far out of that. Half of these trades actually came from my watch list that I put out there on Sunday. And so if you're not watching my watch list Sunday, I think it's a valuable tool to help identify those support resistance levels and then the targets as well. All right, so let's kick off with the first stock. I did a credit spread in EXAS for 36% profit. We take a look at where we were Monday. Monday we were down trading at around 107. So this is trading 107. I managed to sell a 105, 103 put spread and collected 60 cents. So I collected 60 cents here. And I actually closed this out pretty early. I think Wednesday when it made this push up. So it's been just going straight up. Looks beautiful. Had I known it was going to go up like this at this pace, I probably would have done a debit spread and made a higher percentage, but I'm quite happy with taking a 60-cent credit. I managed to close this out for 10 cents on Wednesday, which left me with a 50-cent profit per contract. All right, and that's totally scalable. So if you were playing one contract, that is a $50 profit. If it's 10 contracts, that's $500. If it's 100 contracts, it's $5,000. All right. At the end of the day, it doesn't matter the sizing of contracts. This is still a 36% profit gain. And just holding that credit spread really for 3 days from Monday to Wednesday. Okay. Second stock, it was a credit spread in CZR for a 28% profit. And again, I believe this one was on my watch list. Monday, this was at a low of right around 109. So I managed to sell the 108 level. And I did a 108, 106 put spread for, looks like 51 cents in credit. 51 cents in credit. And then I managed to close this out on the spike yesterday morning on the open for 10 cents. So I actually kept a working order at about 10 cents. And on the open, it kind of spiked up and closed this at 10 cents, which gave me, it's just 51 minus 10, 41 cent profit. 41 cent profit. And again, this is scalable. So if you do one contract, that's $41 in profit. 10 contracts, that would be $410 in profit, and then 100 contracts would be $4,100 in profit. It doesn't matter the sizing of your bankroll, your portfolio, or how much you're putting at risk. This is still a 28% profit. And again, who can complain on a 28% profit over 3 or 4 days on a high probability trade like this, selling credit out of money at key support levels, right? The third trade was a credit spread in VMW for 26% profit. And we can see here Monday, it did come down to this 50 moving average, which is right above 160, kind of close to it. I think, if you got this right at the bottom of this 50, you probably would have gotten more credit than I did, but I sold the 160 and it was a 160, 157, 50 put spread. And I managed to collect here 61 cents. And again, this could have been higher. Had some people in the Discord who are following me, they could have taken this at a lot higher credit. But as we can see here, it just bounced off that level, that 50 moving average, and moved upwards. And I was able to close this out again for 10 cents. And again, 10 cents subtracted from the 61 gives us a 51-cent profit on each contract. Again, scalable, $51 per contract. And at the end of the day, this is still 26% profit. Okay, so 26%. Happy with those returns, especially, if we're just going week to week. Now, the final two trades were a little bit different. I did a debit spread in SPCE, and I managed to get 61% profit here. The way this works is managed to purchase the 30 call. If you take a look at this on Monday, it was trading right around 31. So bought the 30 call and then sold the 34 call against it, which creates this debit spread. Now, the reason why I do a debit spread is because it gives me a higher percentage win, and also reduces my total cost for this 30 call. And especially since I had identified 34 as being my target, it had hit 34 and rejected here. It came close to 34 here, rejected it. So, it could have also rejected 34 again at this point, but it broke right through, which is still good. I managed to close this out, like I said, for 61%. And the way the math works is I bought this spread for $2.30. And the most I could sell it for was $4 because that's a spread. I did end up closing this, I think. All right, so I did end up closing this at 370, which gives me $1.40 profit. $1.40 profit on a 230 risk. Okay, so each contract would net $140 in profit for a $230 risk, which is 61% profit. And the very last one was a debit spread in CRWD, CrowdStrike, for 107% profit. And again, just like that space debit spread, and I didn't actually do this one until yesterday. So yesterday, when it made this jump over 220, I think it was trading right around 222, 223 when I made this trade. I ended up buying the 220 call and selling the 225 call against it. And again, the reason why I chose the 225 level was because I saw some resistance over here and some resistance over here, and this goes back, a week. And so when I saw that, I thought, okay, 225 is probably where it's going to hit resistance, but we got lucky. It broke through that 225 resistance, drove all the way up to 231 this morning, and managed to lock in 107%. But the way this math works out is that I purchased this debit spread for $2.15, and I sold it for $4.75. All right, and this results in $2.60 profit. All right, and then $2.60 profit on a 215 risk. That's $260 on each contract in profit, and on a $215 risk. Okay, so that gives us 107% profit. Now, again, these are strategies that we teach inside of the Phoenix room. So definitely join us there if you're interested in learning these. I've been really, really consistent through trading credit spreads and debit spreads, and also finding these these indicators of support or resistance. Now, one of the stocks I do want to talk about is AMC, and for those of you who watched my watch list on Sunday, I did say that it looked like the pattern was coming down. I thought it was going to hit really 37 is what I called, but I didn't take into account that the 50 moving average was starting to move up. It did come down to 40, so pretty close to the 37. Had I been watching this a little bit closer, I kind of could have gotten into some put, either a call credit spread or a put debit spread. All right, so this is the power of really just doing chart analysis We're not always right, but I think we drive higher probability by finding the right indicators and the right levels with these stocks, and especially stuff that moves with such volatility and intensity like AMC. It can still short squeeze higher. So if you're a fan of AMC, short squeezes are not going to follow patterns. They're just going to happen. All right, so have a great weekend. I'll be back on Sunday with a watch list. Hopefully these are educational enough for you that you'd like to hit that like and subscribe button. See you on Sunday.